Okay, we're in the B period, about just entering the C period. This is right around where the initiative selling took us a little lower. There's a volume cluster here from 37 to 39, and you can see a little cross trade here. I'd like to wait for a retest before we get in. I lost my cursor here. Alright, there you go. There's some cross trade here. I'd like to see a retest on the 37s. B period highs all the way up at 43, but the trade came in right here in the 38s. Interestingly, 38 is also the area where on 220 it turned us from passive to initiative trade, and the F period broke up, and then the K period all the way up to 66s. So this 38 area, having broken under it, certainly could be resistance. We're going to take the 37.25 short, two short 37.25s. The main reference point below us is 13.17. That's the low of the consolidation area from the first week of February, or the second week, I'm sorry. February 7th, I believe, was the low. We're running 2-point stop. We'll keep our 2-point stop at 39.25, and we'll try to reach a target of about 10 points. Should be 27. That's a little above where the consolidation mean is. We might revisit that, but for now it's about 27. We have yet to benefit from keeping our two contracts as compared to the January trade, where we used to have a target for one of the two contracts, and that's interesting. I might revisit our strategy in January. The only thing is our stop strategy in January was off, and we encountered some significant drawdowns. Now I might be able to refine that. I'd like to, though, keep with our two contract target. I think it's just been a matter of execution, not application of theory, that's prevented us from having good gains. I'm going to pause video. Keep watch, see if we can't get down here to the 27s. Another reason why we'd like to hold on to this trade is we broke below the 5-day distribution. The lower limits on the 5-day distribution was 38. So having broken down below that, now was going to check to see what the distribution on the 10-day is. I'm going to pause and look at that. Having broke below the 38 on the 5-day distribution, our 10-day distribution lower limit is 22. So 22 could certainly be a target. 27, let's see, 30 is the point of control of the lower volume cluster. Sort of, I really don't want to use the word point of control. It's just the high line of volume cluster. So there's a good chance we could test the 27. So we're going to hold on for the 27s. Well, we're building a lot of delta, negative delta early. Look at this, 45,000 contracts. We could certainly hit our 27s. We might even actually put our target to the close instead of 27. Leave our stop where it is and just forget about it. And let the market test the 17s. Maybe put the target at 18, 19. Yeah, let's do that. Let's put our target in the teens. 20 is a nice round number. Let's target 20. 20 is the on the 10-day distribution. Let's see. Well, 20 is sort of low. Wow, the 17 is not even in the 10-day distribution. That's interesting. Okay. Well, let's target 25. Let's target 25. If you look at the profile on 211, you'll see a very odd-looking profile, almost like it's an unfinished distribution. So to finish that distribution in a typical Gaussian curve, the area that would have to fill in, I think you might be able to see this because we have the other chart in the background. This is the one I'm talking about. You can see the negative volume cluster here. That's 29. To the close is 34. If you go down a little further to the D period, that's 26. 26 to about 36. We could certainly fill in that area. So maybe our 27 isn't too far off. You know what? We're going to keep our target at 27 because of that. Well, we might have made a mistake in not getting out in the 30 area. I just realized and looked at the 211 profile, this profile in our chart book. If you look in the chart book on 211, you'll see a high volume cluster that took the market up to the day's high in the mid 40s, and that was right at 30s. 30 to about 31 and change. The next large volume cluster is below that at 25, and then the big heavy volume cluster that really had a lot of passive buying that turned initiative was in the low 20s, 21 to about 23. So we're going to stand by our original strategy. We have our stop in at 39.25. Our entry is short from 37.25. So we're all the way back. We gave too many points back. We should have had some sort of trailing stop strategy. But I wanted to bag, you know, the big trade. So we're just going to stand by our original scheme, keep our stop in, and be cognizant of the fact that the high volume cluster in the 30s from the profile on the 11th, which is this one here, you can see that. I don't know if you can see that when we're broadcasting, but we'll see later. If we break through the 30s, then I'll have a pretty good shot at getting our target at the high of that bigger volume cluster at maybe 23. So our target at 27 is right in between there. If we break through the 30s, I would say that we're probably going to go through the 27 and hit the 22, 23 area. So we might actually, since we suffered here a little bit, move our move our target from 27 to the high of that volume cluster, which is 23 and change. So we're going to move it down to 24. That's where we're going to target our exit, 24. Well, we traded back up to the bottom of that high volume cluster from the 37 to the 38.75 area. Couldn't get through that. So I think we're feeling pretty good that we might hit the target in the 20s here. We're patiently waiting here. The D period is over. We're in the E period now, and the D period retested, and the E period retested that volume cluster between 37 and 38.75. We got as high as 38.25, no, 38.50. We didn't get to our stop at 39.25, which was above the volume cluster just a little bit. So we're in the 34s now, testing the D period low. Hopefully we have enough momentum now to get down and get our target fill. We've been patient. Well, we're breaking down here after a consolidation period. Boy, I tell you, it would have been nice to get rid of the 30s, get rid of the trade at the 30s, take that profit, and enter in under a tradesman on the 8 period high. But that's too much to ask at this stage of my career. So we're going to hold tight and see if we can hit our target at 24. Boy, did we miss an opportunity earlier. The D period opened up and sold off. No retracement back up toward the 8 period high or mean or anything. So we're really hoping that we can get a nice trade here. We got to bust through this 31 area, 31, 31 and a quarter, 31.50, 31.75 had cross trade. So we can get some initiative bid activity. We'll bust through this and we'll be well on our way into the 20s. There's also a volume cluster on the February 11th chart that brought us up higher on that day from the 29 to the 28.50 area. It's only 6 price points. I think we can get through that, but that might be a stopping point that we consolidate from the 28s to the 29 and changes. We'll watch this area. Here's the 29s. The bigger area of initiative, passive buying that turned initiative was from the low 20s to the mid 20s, and then the market took off on 211. There's a lot of cross trade down here. We're going to take the 30s, 29s, 35s, 30s. We're out of 30. We're going to produce the video out of 30. That was a nice trade. 14 plus points. That'll help us today. And we have 2 more opportunities today. It's our first trade. Potentially 3 that we'd like to take. I don't want to mess my first trade up, so we're going to try to be as selective as possible. Wait for retracements, counter rallies, the afternoon period. We're not just going to jump right in here again. All right, we're going to produce